Hey guys, how's it going today? We're talking about some of the pitfalls when trying to buy on leased land. If you're not familiar with leased land, you'll see that sometimes when you're scanning through real estate listings, there might be a house or a condo that seems to be a lot cheaper than other competing houses in the area. It may say in the description that it is on leased land. That means you do not own the land, but you will pay a land lease to live in that property. So you technically own the building, you just don't own the land that the building is on. And this is the case for one of the townhouses that my wife and I tried purchasing. My wife and I eventually want to get into real estate, and this condo or this townhouse actually was a lot cheaper than a lot of competing other townhouses in the area. And it wasn't just the purchase price. It was the purchase price, taxes, and insurance all seemed to be a lot cheaper than your traditional townhouse. Part of that is because in this townhouse, it's part of a larger community, so you're only insuring the inside of the townhouse, while your condo or your HOA fees cover the insurance for the whole building. But that's for another conversation. In this case, with the land lease, we got totally hung up when it came to the financing. We were told right away that a traditional bank will not lend to you if the property is on leased land. The alternative here is to go to what's called a credit union. You may be familiar with these. It's typically like a local bank in your area, and the structure is a little different than a traditional bank, but a credit union is more willing to lend to you, at least in the area that we're looking to buy in. That was the case we ran into. So we go to a credit union, they approve us, they say you're good to go, even if it's on leased land. I got a really good interest rate. It was actually 2.65%, so I got a really cheap interest rate, and that's because I've got good credit, low debt, and I am bringing money to the table. So I thought I was pre-approved and ready to go. So if you are looking for a property that may be a single detached home, like an individual house on leased land, just understand that you may have to go through a credit union to get your financing. What created an additional challenge for us was because the place we were looking for was in a condo association. It was technically a townhouse styled condo. The problem we ran into was that the credit union would run an assessment on the entire condo association to see how many of the units were being rented versus owned. So if a certain percentage of the units are rented, that means it has to go through what's called a portfolio loan. A portfolio loan essentially is just a loan that the bank holds in-house and that they do not sell to Fannie Mae or Freddie Mac or any of the outside lenders. They are not able to sell these loans. They have to retain them themselves. If you're not familiar with banking and all the mortgage industry, most mortgages that you get are then sold to another party, and they don't actually hold the mortgage in-house. Some of them might, many of them don't. In this case, a portfolio loan is held in-house. And for us to get a portfolio loan would have to go through management approval through the credit union. So it's going to be held to a higher standard. And what was the nail in the coffin for us was the fact that portfolio loans in this scenario required 20% down. Now with this, my wife and I are first-time home buyers. We can put down as little as 3% and have PMI paid for. So by moving forward with this property, we were going to be giving up our first-time home buyer advantage and be required to put 20% down. We didn't really want to do that for this property and realized it was very challenging to buy this, which means our exit strategy could be just as challenging. If in 10 years we want to sell, who's going to want to move into this condo association and put 20% down? There might be people out there, but that would mean that for us to get out of the property, we'd be running into just as many issues as we're running into trying to buy the property to begin with. So when it comes to leased land purchases, you may not be able to get traditional financing. So there's hang up number one. And if it's in a condo association and that association already has a number of the units rented out, that means you may not even be able to get a traditional loan through a credit union. You may have to get that portfolio loan, which again, higher standards to get that portfolio loan. It has to go through this added layer of management approval, and you may be required to put 20% down. So would you want to do that yourself? Would you want to buy into a condo association that everything about the property is cheaper, but you have to jump through a bunch of hoops to buy the property, only to fast forward in time for when you actually plan on selling it and moving out, that eventually someone else is going to have to jump through just as many hoops to buy the property off of you, meaning your exit strategy is very limited. Again, we do want to hold our properties as rentals, but we may not want to hold them forever. So we could see that buying this was going to be a challenge, and then potentially even selling this was going to be a challenge. And getting in the door, we'd have to come up with a lot of money up front, even though we are first-time home buyers. At the end of the day, this kind of sealed the deal for us, and we did not move forward on the property. And as a matter of fact, that property has sat for months now, unable to be sold because of all these technicalities. And you may be wondering, how do you know that many of the properties in that association are being rented out, meaning we'd have to get this portfolio loan? Well, as a matter of fact, the selling agent required, if we wanted to have him accept our offer or have the seller accept our offer, it was required by the selling agent to come to the table with a portfolio loan. They would not accept an offer unless it was a portfolio loan. That in and of itself was a major hang up, because we went back to the credit union and said, hey, we want to get a portfolio loan. And the credit union said, we don't offer portfolio loans until we have a signed agreement in hand. Then we analyze the agreement. From there, we will issue the portfolio loan. So right out the gate, it was a chicken and the egg scenario where the seller is saying, I need to see proof that it's going to be a portfolio loan. Meanwhile, the credit union was saying, we don't give that information out until we have paperwork to work with. So we got stuck in this cycle back and forth between the selling agent and the buying agent. Finally, our agent did a phenomenal job and intervened and got an agreement together. But again, at the end of the day, due to all the hoops we had to jump through, we ended up walking away from this property. And we think we dodged a bullet with this one, because going into this, we were not aware of what leased land purchases involved. And now we are very aware of what this all involves, and likely won't be moving forward with any type of leased land purchase in the future. So hopefully this video was informative for you to recognize if you're looking at a leased land purchase and you see, hey, there's a lower asking price and lower taxes and potentially even lower insurance, this seems like a good incentive to buy. Here's some of the challenges that you may face buying and also face when you're trying to sell. So again, hopefully this video helped you learn a little bit about leased land purchases. And if you did, I ask that you please like and subscribe. Thank you.